Ever stop to think about what's really powering our digital world? All those TikToks, Netflix binges, even the AI that's writing your essays? Well, it all runs on something you might not think about much: data centers. They're like the giant, super secure brains of the internet, humming away 24/7. And today, we are diving into the fascinating world of one of the biggest players in this space, especially in Asia, Keppel DC REIT for short. If you haven't already subscribed to our channel, please subscribe to our channel. Your support truly makes a difference, enabling us to produce more stock and fundamental analysis content. We just got their latest performance update for the first half of 2025, and let me tell you, the numbers are looking incredibly strong. We'll break down what makes them tick, why they're positioned for massive growth, and what challenges they're watching out for. But first, a quick and important heads up: this video is for informational purposes only. It's based on publicly available data, and it is not a recommendation to buy or sell any investments. Always do your own research and consult with a financial professional. Alright, let's get into the good stuff. KDC REIT just delivered some seriously impressive numbers for the first half of 2025. Imagine this: their distributable income, that's basically the money they can give back to their investors, surged by a whopping 57.2% year-on-year. And what does that mean for investors? Their distribution per unit, which is like a dividend, jumped by 12.8% to 5.133 cents. That's a fantastic leap. So, what's driving this growth? It's mainly due to two big things: smart acquisitions like their Keppel DC Singapore 7 and 8 and Tokyo Data Center 1, and some truly eye-popping rental reversions. Now, rental reversion might sound like jargon, but it's actually super important. It basically means when an old contract expires, they're signing new ones for significantly more rent. In the first half of 2025, KDC REIT achieved a portfolio reversion of around 51%. Think about that. They're renegotiating leases and getting over 50% more rent. That shows incredible demand and pricing power for their data centers. Their portfolio is robust too, with a high occupancy rate of 95.8% as of June 30, 2025, meaning their centers are almost always full. They also have a healthy weighted average lease expiry of 6.9 years, meaning their contracts are long-term, giving them stable income for years to come. So, why is this happening? It's all about the digital economy megatrends. We are talking about the explosion of artificial intelligence and cloud computing. AI workloads are absolutely powering data center demand. New AI facilities can demand up to 1 gigawatt of power. That's like the annual consumption of 800,000 US homes. And tech giants like Microsoft and AWS are planning to pour hundreds of billions into AI-enabled data centers. KDC REIT is perfectly aligned with this. A huge 67.4% of their rental income comes from internet enterprise clients, which includes these massive hyperscalers, the biggest tech companies in the world. But here's one of their biggest secret weapons: their connection to Keppel Limited. KDC REIT isn't just a standalone company, it's a key part of a much larger ecosystem. Keppel often builds new data centers through its private funds. And once these centers are stable, guess who gets the first look to acquire them? KDC REIT. This gives them a unique, steady pipeline of high-quality data centers, without having to fight it out in competitive open markets. Financially, they're also playing it smart. Their aggregate leverage is a conservative 30%, leaving them plenty of room to borrow for new acquisitions without stretching too thin. And get this, their average cost of debt actually went down to 3% in the first half of 2025, which is amazing when many companies are seeing their borrowing costs go up. This means they're managing their finances incredibly well. Now, it's not all smooth sailing. The data center world, like any other, has its challenges. One big one is geopolitics and supply chains. Things like restrictions on critical AI chips can drive up costs and cause delays. Also, power availability is a huge hurdle. Data centers are incredibly power hungry, and in some key hubs, Getting enough electricity can be a massive challenge, even leading to years-long delays for new projects. However, here's the interesting twist. These very challenges, like power shortages and the need for higher power efficiency, act as a major barrier to entry for new competitors. Only established players like KDC REIT, with their deep operational experience and strong financial backing from Keppel, can really navigate these complexities. This actually strengthens their competitive position. They're also pushing hard on sustainability, reducing their emissions and improving energy efficiency, which is vital for attracting those big hyperscale clients who are equally committed to green operations. And while focusing on a few huge hyperscale clients brings fantastic growth, it also means a degree of tenant concentration risk. KDC REIT will need to keep a close eye on managing that balance. So, what's the big picture here? Keppel DC REIT had a fantastic first half of 2025, driven by smart acquisitions and incredible rental growth. They're strategically positioned right at the heart of the AI and digital transformation boom, backed by the powerful Keppel ecosystem, and managing their finances with impressive agility. They face challenges, sure, but their unique strengths allow them to navigate them, potentially turning hurdles into competitive advantages. It really makes you think about how crucial these unseen digital workhorses are, doesn't it? What do you think about the future of data centers and AI? Let us know in the comments below. If you found this insightful, please hit that like button, subscribe for more breakdowns, and share your thoughts. Thank you for watching, and we'll see you in the next one.